Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick, though Dennis might be joining us here a few minutes late. We just had a dip in the S&P futures as we were starting the show. A lot of volatility out there this morning, folks. A lot of news. Friday the 13th, I guess the markets saw that on the calendar and they went, oh, let's put all of our macro news out there at the same time. So we're getting a Brexit, apparently. We're getting a trade deal with China. Phase one of
China might be backing out here.
At least. Oh, yeah. That's the latest. They're going to back out now.
Yeah, they're quiet. Deal must be mutually beneficial. That's it. They're quiet on the details because there are no details.
Exactly.
Go ahead.
Exactly. So that's going to drive us around here this morning. We're at the mercy of these Brexit and trade deal headlines. There was some other news as well. We got some interesting earnings. Facebook is maybe getting an injunction from the FTC, but the macro will be the story of the day. So we'll talk about that, the movements in the market related to both those headlines, at least for the first few minutes of our show. Later on in the show, we're going to be joined by two guests at the same time, and we're talking biotech today, folks. We're going to be joined at 8:35 by Paul Yook and his partner, Mark Charest. They are with LifeSci Fund Management. They're going to talk about what they're seeing in biotech right now. That'll be at 8:35. Joel, what's happening here overnight? We got some action.
Wowzer. Well, we had a higher open on Brexit, right?
Yep.
That's good year. They bought Europe. And we were just hanging out, and we just had just a quick 10-point plunge there. Dennis actually saw it a little bit ahead of time, and then the bottom fell out here, but hit 62.50. That's the daily pivot at 63. That's the only reason, or actually 61. So it's a random walk here. I'm not going to give it any levels. Pre-market highs, what I'll give, it's 31.85. We'll use that as a target on the upside. Crude this morning, crude is in the green by 48 cents at 44, 59.62. Gold in the green too. That's up 520 at 1477.5. Silver up a dime at 17.05. Bitcoin flat here. That's not having much volatility at all. And boy, just a lot of movement here in the pre-market. We'll see how that foretells for the opening session of the 9:30 opening. A lot could be happening between now and then.
Yeah. Thank you, CNBC, for that headline at 8 o'clock. Pretty much on the nose there that China has concerns about the hard targets the U.S. is pushing for with regards to the agricultural purchases, particularly soybeans. So that's what we got now.
I got to hand it to you, Spencer. I got to hand it to young Spencer.
Me?
Yeah. When we were on the pre-market show, you were like, I don't think there's a deal. Where's there a deal? Where's there a signed deal? Do you have inside information? Are you?
No, I just am sick of this market. But that was the headline yesterday. You know what? Here, let me just read the headline from yesterday. We had Trump signs off. This is the headline from Bloomberg.
Yeah, wasn't he signing it?
This is from Bloomberg. Trump signs off on China trade deal to avert December tariffs. And then there was another one that said we had agreed to terms of a deal. Nothing had been signed. There was no contract, no legal language, but they were taking it to Trump. We had agreed to terms of a phase one deal. No, we haven't. We've agreed to nothing. This is all just noise.
Wasn't there a phone call? Did they do a phone call? Remember the phone call incident a while ago?
Yeah, not yesterday.
No, that was a while back.
Right.
Well, there you go. There's the market. We pop right back up. We're in the green here. I'll keep an eye. We're right at mid-range on the session here. I'm still looking at the D's contract for you folks here. Let's see what mid-range in the session is here, because you got very, very few levels to keep an eye on up here in the stratosphere. But let's see, what do we have for mid-range in the December contract? 73.75, and that's where we're trading now. So decision time for the market. But late in the earnings season.
Well, no, let's not go to earnings just yet. We got
No,
we got to
no
talk. We got to talk about Brexit.
Okay, let's talk about Brexit.
This is, gosh, it's like they threw all the macro news at us at the same time here. So we supposedly got a trade deal, which we know we didn't, and we also looks like we're going to get a Brexit now. Boris Johnson essentially pushed his chips into the middle of the table and won the hand is what happened. He called a snap election, thinking it would help him get more leverage in the Brexit discussions. He won that snap election in a landslide, and now it looks like we are going to get, again, looks like, keywords there, looks like we could get a Brexit within the next few weeks here. And you just saw every European seem like stock just jump off that. I mean, look at the banks. Look at BCS. Look at all of them this
Royal
morning.
Bank of
Yeah,
Scotland,
our RBS
BCS.
here. Look at that.
What's the other one? RBS. Yeah, those are just lifetime moves for them. I mean, that's as big a move. Let's look at first look at Barclays, BCS here. That stock, how much did it move the whole year? And here you're trading up 78 cents at 986. So there's already been a lot of, is Europe even closed yet? It's already have the price discovery here. So if you're trading these, the move has pretty much been accounted for. Let's look at these banks. I don't know. I mean, this is such a historical move for these. I guess you would wait for some follow through. You did hit 9.99 here in BCS. You backed off a little bit, so call it $10. This stock hit $10. When's the last time we've been over $10 for BCS? 10.27 back in August of 2018. So if you're looking for a target above $10 in that, there you go. And then let's go to RBS, Royal Bank of Scotland. That's trading up 77 cents, 12.5%. That's just trading at the highs of its session right here. This is at the high. The high in Royal Bank of Scotland is 693. Who else do we throw in that category? ING. Is that another European bank? ING. That's trading up here. So good news for the European banks here.
It's mostly Breton. So, and I'll come on here to just calm down here finally. I mean, I'm getting ready. We're getting ready for the show, and then right at 8 o'clock, S&P's fall 10 handles. So I go into, obviously, I've got to work out of some trades and stuff like that happens. You get that kind of volatility. But just bring up, if you want to see what is really moving over in Europe, it's the EWU and those components. So bring up the EWU. That's obviously your United Kingdom ETF, which is obviously the one that's going to be benefiting the most, it appears, from Brexit. That was the story last night as well. All Europe is trading higher, but nothing is trading higher than the EWU. And if you look at the big banks, yes, some of the European banks are up, but nothing like Barclays, BCS, and RBS. Those two are up enormous. If you look at the other ones, you got Banco Santander up 10%. You got Deutsche Bank up 2%, but nothing like the 8% and the 12% that we're seeing out of RBS and BCS. Those are going to be your big two movers. Lower ones, if you want to look at Lloyd's Bank, LYG, also UK, that's a smaller one. It's up 8% as well. But just go to the EWU components. That's really, when you see an ETF up that much, best thing to do is, hey, let's look under the hood and let's see what's in there. Biggest component of the EWU is HSBC. It's trading up 2%. You got BP, second biggest component, up 1.5%. AstraZeneca up 1.5%. Royal Dutch Shell. Now, obviously, we have oil trading up too, so that helps as well. But these stocks are going to be up no matter what, just because of Brexit. GSK trading up 1%. Diageo trading up 1.96%. So you can go to every single one of those components there. Rio Tinto up 2.1%. All the top components are all up minimum, it seems like, a 2% or more. And then you've got obviously the banks that are up, substantially. So financially driven, obviously, there. So it's going to be a big day over there for those stocks. And that's, the one major headline. And then what Spencer was alluding to when he started the show was that wasn't the only headline we got. We got the second headline. And we were talking yesterday about, obviously, this deal getting closer, which looks like it isn't as close as they let on yesterday. Around and around we go.
It is. What a roller coaster, huh? I mean, the drop on the headline like that, obviously we've settled back. We're still up 6.25. And that news too came between 5 and 6 when the futures were closed. So they adjusted with that with the higher open. But
That was the Brexit news. So
Yep.
yeah, Brexit happened. The Brexit news happened right around just after 5 when the futures were closed. But you saw immediately, European ETFs getting bid up substantially. So, and especially the ones that from the UK, like the EWU itself, which is direct play on the UK. Those were the ones moving. But the one headline that I want to mention too, obviously yesterday, Spencer, if you can just, people who weren't paying attention to the headlines there yesterday, the big reason why we had the substantial rally in the afternoon was it was reported that it looks like the deal is almost done, at least the first part of it.
And I read the Bloomberg headline. It was from I'll read it. This is from 2:30 p.m. yesterday. Trump is from Bloomberg. Trump signs off on China trade deal to avert December tariffs.
Yeah.
That was the headline going around yesterday. Those
How many times have we, and you've got to be skeptical when you see that the deal is close to being done. I mean, you see Trump signs off. It sounds okay. Well, we're getting real serious now. It signs off on the tariffs, though. It wasn't signs off on a deal.
Trump signs off. That I read that and I think, oh, he signed a piece of paper. But then in the second paragraph it says the terms have been agreed, but the legal text has not yet been finalized. What?
Yeah. Again, it seems like these headlines. Some of them are written just to grab clicks. And you got to get in. The devil's in the details a lot of times. We know that even from trading headlines. Sometimes you see, oh yeah, there's something big happening here, and then you go and read the story, and maybe it's not that big. I mean, it was big news yesterday that we're getting closer to a deal, but we've been hearing this for a year and a half. That we're deal, no deal, deal, no deal. So until we see like deal signed, not deal signed to push back the tariffs, deal signed for the first part of the trade agreement, that's a different story. And the question is it all priced in now too? I mean, I just wonder, the S&Ps have rallied so much on the potential deal that you just wonder if a lot of it isn't already baked in. So it's not just automatic that if we get a signed deal the first part, that the S&Ps are going to rip up 5%. That's just not automatic. It could do the opposite. So it's a tricky market to trade off the headlines. It's the bottom line. But we have a lot of macro risk right now. So if you're even trading individual stocks and saying, I don't care about any of this stuff, I'm an individual stock trader.
No.
Well, this stuff affects your individual stocks more than your individual stocks.
Yeah.
So it's important.
On Friday the 13th of all days, I guess I
forgot it's Friday the 13th.
Yeah, I don't know. Is that a good omen or a bad omen? I'm not sure.
You tell me.
I mean, it seemed like yesterday the market was so certain. Oh, we signed off on a trade deal, and we're definitely getting a Brexit within like a month. That was the tone yesterday. Whether that changes today, it has already changed today on the U.S.-China front. I don't know about Brexit, but the market seems pretty confident that Brexit is going to happen now, which is a good thing because all we want is some certainty. All we want is a resolution to the conflict here. But
I mean, think about how long we've been talking about Brexit. 2 years?
2 years.
2 years.
Yep.
Let's get some resolution. If it's going to happen, let's do it.
If not,
get her done. We'll deal with the repercussions of it all after. Let's get her done. That's why the market's plotting it. Let's get it done.
Exactly.
I mean, I think the obviously the UK market's plotting it more because hey, they think they can do better on their own, obviously. And there's a lot of people that believe that over in Europe because it's what they voted for. So, I don't know, Europe's rallying off of it too. So maybe they think everybody's better off without Europe. I'm not sure. Or without the UK. But in any regard here, we don't need to analyze, what means what. We just need to analyze what the trading action is. And the trading action is telling you that UK is applauding this deal. So expect most of your UK stocks, which are already trading higher, to be up substantially on this news.
I can't remember when there wasn't a trade war.
I know it feels like it has been forever. It's a good point. We've been talking the trade war on this show. I feel like for 2 years. I guess it's only been a year and a half, but it feels like forever. And it's got to be 100 headlines we've had from it. Oh. I bet you 100. In the 400 trading days we've probably had since trade wars started. 250 trading days a year. We'll say maybe 350 trading days total that we've had. It's probably 100 days we've had a headline on deal no deal from China. I guess as a trader, we should applaud it. It's more volatility. I make money as there is more volatility.
Correct.
So it gives you more inefficiencies. It gives you more opportunity. But as an investor, you just scratch your head and you say, man, no wonder the market hasn't really gone anywhere for the last couple of years. People say, oh, it's up 26%. What are you talking about? Yeah, but the year before we were down. I mean, we just finally in the second part of, in the last 2 months, finally started to break out of what has been a 2-year trading range. Like we had on the S&Ps, we were up at 293 a year and a half ago. And we just finally have broken out of that area. So most of this gains have happened really in the last 2 months. As we get closer to a deal.
Yeah, I don't know what else there is to say. I don't think Joel does either.
No,
Okay.
I don't. I mean, it is what it is.
China's going to hold a press briefing today. Cool.
So we sit here and we still go round and around and around until they tell us we don't get to go around anymore. So keep trading it. I mean, the fade trade has worked for a while, not in the last couple of weeks, because the market is trading like a deal is imminent. I'll tell you that. Yesterday's move, the moves we've had, every dip getting bought like crazy. The market's trading like there's good news coming. The question is, first of all, how good is the good news going to be? And then when is that actually going to happen?
Yeah. All right. Let's move on away from the macro.
Sure.
News, non-news. Where would you like to go? We can go to biotech. We can go to earnings.
We'll do. There's 4 big reports, 4 of them. So we might as well do the 4 big ones.
Okay.
And probably the biggest one from last night is probably Adobe, because it's trading up $8 and it's making new all-time highs. I believe it's not all-time highs. Yes, it is. And it reported a pretty good quarter.
Yes, they did. They beat their EPS estimate. They beat the sales estimate. They gave some guidance for next year that was also good. So good.
Good. We like good. So Adobe actually, believe it or not, sold off initially because the news algos always get it wrong. I'm saying always, it's not always, but it seems like they get it wrong a lot of times. So Adobe decided to sell off and go down on the initial bar to $300. Right close to $300. You hardly see it on that chart because it's just a little line because it was down there for like 10 seconds. I don't know what they saw in the initial headline that they didn't like, but they got it dead wrong. And then they ripped it 17 points.
All right.
Who's running this news algo that we talk about? Maybe it's selective perception on our part. Is it selective perception? Chad, I'm asking you. Is it just selective perception that they seem to be wrong a lot of times? But man, I mean, if I was running that news algo and I keep selling stocks when I should be buying and buying stocks when I should be selling, I think I'd probably switch the programming in that algo a little bit. So, but maybe it's selective perception. Maybe, the other ones that we don't point out, maybe they're really good in the small caps. We don't cover them that much. The smaller stocks, we always cover the mega caps here, or the larger cap stocks. But it seems like they just get it. I don't understand. Like I look at this Adobe report, and why does it go down $5? So you look at the numbers and you think, okay, you got 229 versus 226, 2.8. So it's not a huge beat. The guidance, looks pretty good too. I mean, I don't know. Maybe I'm just, not looking right, but it looks like an okay report. I don't see why, for whatever reason, you're hitting that, especially in a day that everybody's looking to buy dips still. Dangerous to be hitting stocks when you're in this market that can continuously buys dips.
Yeah, it's I'm having problems here with my shorter term charts here. So I just marked that pre-market high there. Comes in, was it closer like to 320 here? Did we get up there? 318, it looks like we spiked to, leaking a little bit, but just use that pre-market high as a target. And I don't know, I might have to reboot my computer here. Not reboot, but up 884, all-time high. Pick your target here. Pre-market. Oh, I did get it. We have leaked a little bit. We did get to 317.58. So use that as a target. That was on the initial print. The pre-market low down at 3. A lot of stock traded there too, Dennis. I was just going to say maybe they hit it on like light volume or something.
It was trading down.
It traded. Oh man, it traded over 500,000 shares there.
It's so fast. Like for a human to just say, "Oh, it's fairly quick." But all I was thinking is, and you can't stop but let's get more information here. You can't help but think that I had a mentality of buying the dip on Adobe too, even before I saw the numbers. I'm like looking at this and saying, we pull back a little bit, everybody's buying the dips on everything here. The market's been ripping. We're in full bull mode. I'm looking to buy dips on earnings reports too, because a lot of times they rip right back. I mean, it depends on the report and it depends on what the stock has done into it, but the cloud's hot again. I mean, you look at these cloud stocks and they were cold back in October. A lot of them have turned around. Twilio, not so much. There's still a few that are in the gutter, but CRM's been your leader. It had a good day yesterday. They're starting to pick up again, but I mean, everything, it's the overall market that's driving that sector higher.
All right, let's do some other reports here. What do you want to do, Spencer?
Let's go to, I guess we'll go to Oracle. We'll stay with tech here. So Adobe was good. How was Oracle yesterday? It was actually okay. It was mixed. They beat on the EPS, 90 cents versus 88 cents. Sales missed by a hair, 9.6 versus 9.65 billion dollars. They gave some guidance, I believe, on the conference call. They said for the current quarter, so their Q3, this current quarter happening right now, total revenues are expected to grow 1 to 3% on a constant currency basis. And what else do they say? Autonomous database cloud revenue was up over 100% last quarter, so that's a good number to see. But that's what I got on Oracle. A mixed report.
Oracle, we said yesterday, it always seems to disappoint. It seems like, I think the last quarter was one that it went the other way and it actually went up, but it seems like 3 out of 4 quarters this thing goes down. It ran straight up into the quarter. This is like textbook Oracle. Pulls back $1, maybe $2 today, maybe even, if in a worst case you get down like 54, maybe. And I'm not saying that. I'm just saying if it does, you look at this 3 months from now, it's probably right back up at the highs, because it's one that dips on the earnings, stays out of favor for maybe a few weeks, and slowly starts to drift back up. And by the time you get back to the other earnings report, it's either making, it's back where it was before the prior report, or making new highs. It's just the best, it seems like one of the best buy the dip stocks out there.
Yep. It held at resistance, high of the move there.
You okay, Joel?
I hit the mute button there on the quick sneeze.
Okay.
We had big old bracket there, 56.60. Then you went to 54.46. So there you're good buck above that. Straight up move. That 54.50 area looks good. This is where the move emanated from. You had a low at 54.18 and then another low at 54.30. So let's see if you get back down in the lower 54s, find some buyers in Oracle. On the way back up here, let's look at the range from yesterday. And the range, we closed near the high. Let's see what happens at 55.76. That was a low from yesterday. That would fill the gap. So you might find some resistance there if you do go in rally mode.
Staying with tech here, we'll go to Broadcom, also reporting yesterday after the close. Q4 adjusted EPS of $5.39. That beat the estimate by 3 cents. Sales for the quarter, 5.76 versus $5.73 billion. So a slight beat and a slight beat for the Q4 numbers. They gave some sales guidance for next year that came in higher than estimates by about $1 to $2 billion.
Big range here off the number. Boom, boom. Pre-market low by the dippers did come in. You got to 316.86, $5 off that low. Nice run. Let's see what happens. Yesterday's low was 3. You're still trading within yesterday's range. Big old range yesterday. Bought this thing up ahead of the report. So let's just stick with the range from yesterday, 1943, support from yesterday. And we'll look for resistance at the close, 327.80.
I mean, this is a classic example of a stock that ran up into the report significantly. It was up $10 ahead of the report yesterday at one time. So this is obviously the case where stocks got to blow it away. Adobe was up, but it was actually down earlier. You can see the Adobe chart. This didn't run. I mean, for 7 markets been going straight up. Adobe's been going nowhere. So you can say, well, Adobe didn't need to blow it away, but AVGO absolutely needed to. And that's just looking at the chart. What's it done going into it? Expectations are higher. They're going to have a higher bar to get over because the stock was $300 or $303 a week and a half ago. So it's ran up 10% in a week and a half. Got to blow it away. Didn't blow it away. It's down slightly. With that being said, the buy the dip mentality that's out here, maybe you're early at 323. I definitely think you could get to yesterday's low, if possible, 319.43. What happens after that? If you get through that, then you'd be down to 315. So Yeah, and you got to be careful. I mean, you can't just go and randomly buy the dip on everything, but it seems like more often than not, when you're buying the dip, you're getting to be on the right side of the trade eventually.
All right, what else do we do? Costco?
Yep, that's the last one. Last of the big ones, really.
Last of the big Mohicans.
For the season, I would say. I don't know who reports next week, if anybody. I haven't looked yet. But Costco, also after the close yesterday, reporting Q1 EPS. I feel like they always beat. $1.90 versus $1.71. Sales actually missed by a hair, 37.04 billion versus 37.25 billion. So a slight sales miss for last quarter. Comms for the quarter up 4.3% on a year-over-year basis. E-commerce comms up 5.5% on a year-over-year basis. I feel like it's always a good quarter for Costco.
Again, because we get the comps, I said this yesterday on the show, because we get the comps every month, it's not totally like, we're in the dark here on Costco. So that's one thing to always consider, that, I think sometimes volatility is sometimes muted off these Costco reports because you kind of got a feel for it already with the comps. I used to like it that all the retailers did that, and hardly any do it anymore. It's trading down. I mean, you got some support if you just get down to the 292. It's a little bit defensive. So if the market's really ripping, is this a stock that, is going to continue to rip with the market? Probably not. It has some defensive aspects to it. So I think I'm just hands off. I could see it getting down to the 292 area.
Yeah.
But again, if it gets to silly or something, eventually the Costco dips probably get bought too. But I'd be cautious just because of the defensive aspect of it. This isn't the kind of, if we get a trade deal, it's not going to be like, everybody buy Costco. It's just the way this market works.
Everyone's already buying Costco. No.
That parking lot's just insane.
Yeah. Pull up the daily on this one, because I think this is one of your, sometimes I pass, sometimes there's an easier chart. Spencer's going to go to the daily here, and it's just hold 292. I mean, just look at that. Dennis, you mentioned that level. We had a big red candle that day. It stopped at 92.50. You go back, it had just a couple lows in that area. What was your 2-day low? Your 2-day low was 93.05. So just as long, give yourself some room here. As long as you hold 292, you got to think that this thing is in a pretty good territory. Under 292, I think things open up, but that's what I'd be using. If you're a longer term perspective on things, I like that level, and see if we can get back up to challenge the what's the all-time high in Costco? Just the 307.10. But I like 292 as support.
That's your earnings. Now we go into a lull where you're going to have no earnings for a while. Maybe that's a nice thing. I mean, it's not no earnings, but there's not going to be as much happening.
Seems like this is like really still lingering. The end of the.
There always is something. Reporting.
Yeah, like won't BlackBerry come out or something? Aren't they like really late? I think
they're coming.
Yep.
Next week we have FedEx, and Nike's always like the last one. We have Nike.
The official end of earnings season. It used to be Alcoa kicks it off, but now nobody talks about Alcoa, so they don't even mention that one anymore. Nike ends it.
Hey, look at Chewy. Chewy up 54 cents today.
That stock just keeps moving again too. I think there was some type of not an activist, but there was somebody bought a bunch of shares yesterday. I saw that go by.
How about
it was a company. It was passive stake though. But I did see that go by in the SEC filing.
Viking Global Investors.
There you go.
Who's backing
that
up?
Might help it.
Who's backing up the truck under $30 in Peloton? You think Mr. Left is trying to wiggle out of his short there?
Good level, Joel. I like that.
Yeah.
And you know what? I was saying I think we're going to get a run here. Prior, maybe this is the dip to buy for that run.
And you know what?
I'm still scared long term on this, so that's why I can't bring myself to buy it. But I still think they're gonna have a pretty darn good quarter. But you don't hear from that till February.
Did I tell you we cleared out the 20-year-old stair? Well, we had a 50-year-old bike, and then a treadmill. We cleared it out. Boom, getting ready for that Peloton to be delivered last week. I was talking to another buddy of mine who has a friend that got one. He absolutely loves it. He's absolutely Dennis, you got to get one because you don't have time to work out.
I have a treadmill. I put my here. I've actually created my own Peloton because what I do is I bring my iPad onto my own current treadmill, and I watch PreMarket Prep.
You're
Dennis,
you're a genius.
You can.
I do bring my iPad. Actually, I've got the Disney Plus app on my iPad, and I sit there and I watch the Mandalorian or I watch some of the Star Wars. I get that going on my iPad. So I've already created my own Peloton. I don't need to spend.
You could.
I have the Disney Plus app, which gives me new content as well. So I don't need, maybe Disney Plus could come out with somebody to tell me what to do on my treadmill.
How do we get
walk now faster?
How do we get Benzinga Pro on the Peloton? That's the question.
Oh, it's easy. Really?
I get it on my iPad, so you don't even need to worry about that.
All right.
Dennis, as soon as we get it set up and as soon as Lisa figures it out,
I'll come over. Maybe you'll make me a believer. Right now, I'm a non-believer, but I still think there's a trade here to the upside.
We're going to get you. We're going to get you your own profile. You can get. You can have different pro. We're going to get one for you.
Excellent. I'll look forward to that, Joel.
Okay.
All right. Let's go to Facebook here. Facebook took a bit of a haircut yesterday. The news is that the FTC is seeking an injunction against Facebook over how the different parts of their business work together. So how Facebook works with Instagram and WhatsApp. Nothing has happened yet, but an injunction would compel Facebook to do or not do certain things.
It's an ugly candle. We've seen this already happen before, though, and the dip was bought. So I don't know if I'm coming. I own Facebook, my long-term portfolio. I'm not selling it on this headline thinking, oh, we've got some major problems coming here. We saw this headline happen already, I think, a couple of times. A similar headline, obviously. And I think it was back in October when you see the stock dropped about $8 in the one day there. You can see the big move there, 190 to 181. I think that might have been it. There was a couple where it's dropped like this before. Those dips, there were buying opportunities before. I'm going to say it's a buying opportunity again, although I already own it. So,
yeah, that was a big candle. They bought it up. That whole area 195. I see we dipped to 194.18. Kind of like the Costco chart. Like you stay above 195 here, 195.08. That was your low on the third. You dipped below it yesterday. Just draw a line there, 195. I wouldn't be too worried about this thing until it closed below 195. But boy, that was a big candle yesterday. Staying green here. Let's see if people reload again at 200. Big volume yesterday too. But isn't this an old story too? Like with Facebook, this is a new story.
It's the headline.
It's been a story. It's been materializing for a while though. This isn't like out of the blue.
No, but the FTC, we haven't gotten anything beyond the fact that the FTC is investigating Facebook. Now we're getting, okay, what's actually happening in that? They're seeking an injunction. What's next? So this is just it's going to continue to develop. But the story hasn't developed at all yet. All we got was the initial headline.
It's early.
It's very early.
Will it be resolved before the trade war is over or not? That's
unlikely, I would say. Let's do one more before we grab our guest today. Let's do Lyft. Lyft is disrupting Hertz and Avis yesterday. They unveiled a rental car service in certain cities. You don't even have to go to the counter. Why would you use Hertz or Avis now?
Hertz and Car got hit hard on this yesterday. Hertz was down. You can see the candle. This was yesterday afternoon. You can see straight down move. CAR, same straight down move. So I don't know. The story was yesterday.
Yesterday's story, I will say here for Lyft, I got a good number for you. If you want more of a lift in this, you got to get to 47.50. Someone's perched there, 47.44. Yesterday's high, 47.55. Wednesday's high. You also took a look at that level on December 3rd at 47.56. There you go. That's your resistance. Double top for now. Needs to take it out 70 cents away, but there you go. That's it. And for Uber, let's look at Uber. I know it's a different story. When did they have the when was the news that they got kicked out of the UK? That was a couple days ago, right?
It was last week.
Last week. They bought it up. Yep, they bought it up.
By the dip.
Even in
Uber.
Again.
All right, let's bring on today's guest, and we're going to bring on two people right now, both joining us by phone. Paul Yook is the founding partner of LifeSci Venture Partners, the creator of the BioShares ETFs with the tickers BBC and BBP. Also, his partner, Mark Charest, who is a founding partner and portfolio manager for LifeSci Fund Management. Paul and Mark, good morning. Can you hear me?
Good morning. Good to be here.
All right. I guess we'll just start with Paul. Paul, you've joined our show before. I haven't spoken to you for a while. Give us just an overview since we last spoke. We've got a bunch of new listeners. Give us a few quick rundown of what LifeSci Venture Partners and what LifeSci Fund Management does.
Absolutely. So LifeSci is a global consultancy. We have a few different operating units, but on the asset management side, we have a couple of ETFs which trade under the ticker symbols BBC. It's our clinical ETF, which is actually up 57% year to date. We have BBP, which is our revenue-generating biotech ETF. And then recently, we've launched our mutual funds, which I'll let Mark speak about. But then on the private side, which is also exciting, we have some venture funds which invest in private-stage biotech and medical device companies.
So, what's the impetus for starting a mutual fund right now? As ETFs sort of move into that space, ETFs have been moving to maybe some ETFs become a little bit less transparent and look a little bit more like mutual funds. What is the impetus for moving into the mutual fund space in terms of asset management right now?
Yeah, I'll let Mark talk about that. And before I do, I just want to introduce Mark. Mark has a PhD in organic chemistry from Harvard, and he's had a very long career in fund management, both on the mutual fund side, the private equity VC side, as well as hedge funds. So he really has a unique background to launch our exciting mutual fund.
Yeah, no, thanks for that, Paul, and happy to talk a little bit about it. So maybe I'll just give a little bit of background on it, and speak to the question of why mutual fund now in this space. So, LifeSci Fund Management was founded to manage the alpha-centric LifeSci Healthcare Fund. We just launched. We're a new fund. Our ticker is LYFIX. And then for the other share classes, the A and C share classes, LYFCX and LYFAX. The fund is focused exclusively in the healthcare space and has a sub-focus on science-driven biotechnology and pharmaceutical companies, really addressing the most high unmet needs. Getting a little more into the question, if you step back and look at the healthcare sector, it has the largest standard deviation of return across any industry segment. At the same time, global healthcare spend is, exceeding $8 trillion, and it's projected to grow at a rate over the next 5 years at over 5%. That's obviously a rate that's surpassing GDP projections. So, we think it's a must-own sector, but given the, high standard deviation of return and the volatility, and I would say that the often mispricing of these assets, we think an active management approach is very well suited here. And, I'm excited to partner with LifeSci to really benefit from LifeSci's, global reach and insights in innovative healthcare, combined with my background in portfolio management. We think this is a very compelling product to bring forward.
So can you go into a little more detail about what the focus of the funds are, the ETFs and the mutual fund, what you're focusing on and what kind of companies you hold?
Yeah, I'll start on the ETFs, and the ETFs really are computerized, algorithmic, and we've used kind of our careers of knowledge in the evolving biotech sector to devise what we think is a better strategy, but ultimately there is no portfolio manager discretion. So the index gives you what the sector gives you, which is long-term growth, but tremendous volatility. And I think taking that sector and harnessing it with active portfolio management like Mark does will give it a different approach to investing in the space. And I'll let Mark speak about that.
Yeah, for sure. So, exactly as Paul said, I mean, what we do is, we look pretty broadly at healthcare, and we follow, both the innovative development companies and also, the cash flow generating companies. And we have a view for, where things are trading from valuation perspective and when it becomes compelling to own them on the profitable company side. Obviously, we're also watching, headline news and trends and, adjust our positioning to, where is the most favorable risk reward at any given moment. And then on the development company side, we use our scientific expertise to really unpack and go deep into the science and understand, what really is the potential. As anyone who invests in biotech and the pharma space knows, is that when you come across, major data events and catalysts, whether they be regulatory events or, major clinical readouts, stocks can move, 100% or more up and substantially on the downside. So, having I would say, next level insights and being able to position appropriately against, these companies as they go through major events, can be a really exciting source of alpha. So, really in short, what we're trying to do is, continuously monitor all the companies across the sector and position the capital for the best risk reward at any given time.
Had either of you seen the Sarepta news from yesterday about another Duchenne muscular dystrophy treatment? I'm not sure.
Yeah, exon 53 is now approved apparently. So it was really controversial when it was rejected, a number of months ago. And this is an interesting case where the company actually appealed FDA's ruling through an internal appeal process. And obviously, this morning they were. Or yesterday it came out, I guess after the market closed yesterday, they were able to get approval. But, I think it's incrementally positive for the space, and it speaks to, I would say, the increased, flexibility in the regulatory agency to approve innovative new medicines.
I think it's fairly unprecedented. I mean, Mark, I can't think of a time where a company lobbied like this and very quickly had the FDA turn around and approve the drug.
Yeah, Paul, especially in the time frame that this happened. I mean, if you just think about the timing, usually the way FDA works is everything is on a predicated schedule. So even to set up a meeting to talk to FDA about substantive issues takes months to even set these things up. So from my reading of the press release and FDA's announcement, it seems like they levered pretty heavily on sort of the breakthrough nature of this therapy, and because it's an indication without any other treatment alternatives and a high unmet need. I think that the agency, to Paul's point, I think went out of their way to very quickly and rapidly mobilize, to complete the review and bring the product out so that patients could have access to it.
So the stock is up 33% this morning. Is that an appropriate move here?
Well, let's step back and look at Sarepta in context, right? So it's about a $10 billion market cap company. If you look at their sister drug to Exondys 53, the golodirsen, which was just approved, it's Exondys 51, which addresses a slightly larger subset of Duchenne's patients. And that drug's doing, it's a 300-ish, a little more than that, $1 million a year, right? For almost a $10 billion company, I think a lot of Sarepta value is in the pipeline, and certainly a lot of the really exciting gene therapy pipeline. So if you think of this as another $300+ million opportunity, should it be a 30% move, so a $2 billion move in the stock? I mean, I think that's probably about right. I don't know, Paul, what's your math telling you?
I think about it a little bit more kind of in prices for rare diseases like this, where you have very strong franchises that have been demanding premiums. If you look at the acquisitions that have occurred just in the past week or two, for Medicines Company, for Synthorax, for ORCL, the big pharma companies need pipeline assets and they need growth. And a company like Sarepta, it's pretty rare where you can project for just a couple of years and have $1 billion plus of a very strong franchise. So I think that $10 billion is sustainable, and there's real revenue growth ahead to drive it higher.
Mark, I just want to ask you, and obviously you just alluded to it, we've seen some acquisitions in this gene therapy sector as of recent. Now we get some good news for some Sarepta. Are there other, stocks in this and the gene therapy arena here that we should be looking at?
Yeah, well, I think it's, with Audentes and Spark, being, the two big, gene therapy kind of acquisitions, I think that, it's credible to imagine any of these companies could be in play. For a large pharma looking to establish, kind of a presence in Novartis's acquisition of Avexis too, right? So there's been three of these, pretty large takeouts. I would say, anyone that has a large, gene therapy suite of programs and the manufacturing capability and sort of internal scientific expertise to actually get these things forward. One thing that's underappreciated here is that the manufacturing know-how and the actual ability to make these products to a regulatory standard is non-trivial. And I think, a big part of some of the acquisition premium was, buying the capabilities to actually do the manufacturing, right? And so, I think, Unicure, Regenix, Sarepta has quite a big suite. There's some smaller emerging ones, Adverum, right? There's a lot of exciting innovation, in this sort of space. And I think any of them could potentially be candidates for acquisition. I mean, even look at Bluebird Bio, right? This was a very high-flying company that sort of tested lows and is sort of coming back a little bit out of ash here. That's one too, where boy, they have quite a bit of manufacturing capabilities. They have a number of exciting products. I mean, I don't know, Paul. I mean, I don't think I'd be surprised to see another gene therapy acquisition between now and J.P. Morgan. What would you say?
Oh, absolutely. Gene therapy is really, it's kind of where antibodies or peptide therapeutics were maybe 15 or 20 years ago. And it's now becoming, it was that the first few companies like the Regenexes of the world were very unique in that they had all this IP, but now it's becoming another therapeutic modality that's pretty widespread. Every pharma company has to have some capabilities in the space. So, the number of acquisitions in space will go up every year, and everyone will have gene therapy expertise. We like a lot of these small companies. We like Rocket a lot. Rocket was a company we invested out of our venture fund, and it is in our ETFs, and the ticker is RCKT. They've got a couple of upcoming clinical readouts. The management team is outstanding, and they have a pretty diversified portfolio of rare and other disorders. So we're excited about that one, I definitely think we're going to see a lot of acquisitions in the space in 2020.
We're on the line with Paul Yook and Mark Charest. They're the founding partners at LifeSci Ventures, with the ETFs. Mark, one question, or Paul, you were on a while ago. Were you the one that gave us KRYS at the $10, $11 range? Because I know we've had a couple different biotech experts on the show. Was that?
Yeah, we definitely talked about that one, and that's another perfect example of a very excellent gene therapy company focused on some rare disorders, and there's not a lot of competition when you focus on these diseases that no one else is focused on.
And explain Biogen to us here. They had a study for Alzheimer's, which I thought they scrapped, took a hit. They brought it back. New results came out with something more for the heart and clearing plaque. I still don't understand what's going on with that drug. Could you give us an update and give us some future thoughts on Biogen hanging around $300?
Yeah, no, happy to take that one. This is Mark. So, this is an interesting one where, Biogen was developing really a flagship therapeutic for Alzheimer's disease based on this amyloid hypothesis, whereby, the thesis was scientifically clearing the amyloid would, lead to, symptom improvement and clinical benefit for Alzheimer's patients. And they were running so the standard for approval is 2 large, well-controlled phase 3 pivotal trials in which they were running, and they stopped early at an interim analysis because the interim analysis suggested that the studies would not meet the primary efficacy endpoint. Since that time, so that led to the rapid decline in Biogen stock, sort of back early in the year, right? You see when it was trading in the 340 range, and it came all the way down to just a little over 200. The announcement, a couple of months ago was that they have done a reanalysis of this data, and they are going to go forward and file it and try to get approval. And the rationale for doing that is, one of the trials, they're pointing to a benefit that was seen in the second trial. So there's the second trial. They're arguing that if you look at certain subsets of patients and you sort of do a little bit of interpretation of the data and put it that way, that the trial could be viewed as positive. So let's step back for a second, right? It's very common to do post hoc analysis of clinical trials. Think of it like baseball statistics in the sense that you could, if given the aggregate of all baseball statistics, you could correlate the phase of the moon to batting averages in certain stadiums if you try hard enough, right? If given a large enough data set, you can find relationships that may or may not be cause and effect related. So in clinical trial analysis, anything that's done post hoc or after the trial is over, going back and looking at data and looking for correlations is always viewed with a sort of a lens of skepticism because, just like baseball statistics, if you go in there, within the variation of the data, you can, point to relationships that may or may not be true. And to validate it, you would have to go forward and do it in a prospectively defined way and say, okay, we're going to do a new study to look exactly at, this effect. So, I think that, the company is claiming that, they have a totality of the data package that, if you view it favorably, suggests that the drug is having a beneficial effect. And I think it's clear that, by the strict standard of did they meet unambiguous benefit in the pre-specified primary endpoint in 2 well-controlled pivotal trials, the answer to that is no, right? So the company is saying, okay, if you look at the totality of the data and you do some of this, data, post hoc data analysis, you can see a benefit here, and we're going to file it, right? So the other side of the coin to analyze here is the risk side. So we've talked about the efficacy side, right? So I think that what I've tried to summarize is that the efficacy did not meet the usual standard for approval set out for the indication, and the company is trying to rely on a little bit of data analysis to sort of bridge that gap. The other side in any new drug evaluation is the safety side. And from a safety perspective, there is, a rate of this, a lot of patients drop out of the study, although these are severe patients, so these things happen. But, there's this ARIA side effect, which is, sort of this thing that shows up on imaging that could be associated with some cranial bleeding and whatnot. And, I think that the true risk is perhaps not precisely characterized, but there could be some risk here. So there's a risk argument to be made that, well, if efficacy isn't a smoking gun and there might be some risk here to these patients, is the overall risk benefit positive? And I think that, overall the street from folks I talked to, has some skepticism about the trial, and I think it's probably being probabilized at 30 or something percent if you look at the stock price and just estimate what's being priced in. So, I think that's kind of where it's at.
That was a really good answer. That was a good explanation of, I think, of the entire process here and what we can expect going forward. One more before I let you guys go. I don't know if you followed the medical device space. We're getting a question from our chat about Shockwave Medical, SWAV. I don't know if it's on your radar. If it is, do you have thoughts?
Yeah, I can take that. This is Paul. I mean, Shockwave, they do have a great product. It's really achieving tremendous growth, new product, doctors make money, nice razor blade model. And so, one of the 2 or 3, I think, medical device IPOs of the year, and that's the contrast with 30 or so in the biotech sector. So there's a little bit of scarcity that's driving some of these small cap medical device, high growth medical device companies up. Shockwave came out roughly the same week as another company called Silk, S-I-L-K. These companies are trading at extremely high valuations, 10 to 20 times sales in some cases. So I think we're going to see more medical device stories come out. I think you need to build a diversified book, but if you look at kind of the mid cap and larger cap companies, there is exciting growth ahead. Dexcom and Insulet, which is PODD in the space, are continuing to trend higher. Sales have been nicely beating estimates, and really they've been insulated from a lot of the medical reform concerns that the drug space has had. So I think there's room higher on Shock. I think they could beat estimates for a while moving forward, just because their growth has been pretty explosive.
All right, we've been on the line with Paul Yook and Mark Charest from LifeSci Venture Partners and LifeSci Fund Management. Paul and Mark, thank you both so much for the time today, and have a great rest of your day.
Thanks, guys.
Thanks, guys. Enjoyed it.
All right. 8:55 here now. Joel, what I miss out there? Anything? Oh, got you on mute there.
Got me on mute. Not much. That quick dip was that was bought up and went down to 62.50, and now you're right back near the highs of the session. So pre-market high 31.85 even. That's your target. After that, folks, maybe we can talk about 3,200 in the futures and just going here off the December contract. I'll be have those fresh March numbers on Monday.
Someone in the chat dropped in Grub.
Grub?
Man,
Okay, let's take a look
who
at
is buying this stock?
We're on the comeback trail.
Who is buying this?
Buy the dippers there, Mr. Israel. Don't you listen to pre-market prep?
No, I
Buy the dip.
Yes, I don't.
Grub, you know what? The bottom, Joel called it perfectly. The day we got the 8 downgrades or 9 downgrades in one day, that was the absolute bottom. And you were joking a bit, but you were serious a bit there too. Like everybody threw in the towel. That was the very bottom. It got 9 downgrades the day after that bad news, hit the low of 32.11, and it's been straight up ever since. Everybody downgraded this at the worst possible time.
Dennis,
9 downgrades.
Could you design a filter for me right now? If D.A. Davidson, Wedbush, Stiefel Nicholas, JMP, Mizuho, Cowen, BTIG, Goldman Sachs, Craig Hallam, Gordon Haskett, and Guggenheim all downgrade the stock on the same day.
We automatically buy.
All in.
All in.
All in.
Joel's the gambler, and I'm
all in. I mean, holy moly, come on. And then
we said about it that day, if there was ever going to be everybody throwing in the towel, this is it. We didn't, but you said it. You were saying this could be the bottom when everybody throws in the towel like that. I didn't buy it. You didn't buy it. I don't think
no.
Wish we would have. But unbelievable. It's been straight up. I mean, straight up ever since. You're talking about one of the best performers in the last month. The stocks went from $32 to $42. You're talking about a 30% move here in just over a month and a half.
This makes no sense.
It's that day that everyone downgraded it.
And just for simple trick, I mean, that day you made a low at 32.55, right? The next day you went to 32.11, took out that low. And then you came back up, it closed at 34, and then you had maybe a couple days to buy it, 32, 33. But yeah, that's interesting. But now up 12 cents. I mean, gap, are you looking for a gap fill here? That's going to take a while. A lot of your shorter term players. So 56, 51. I guess if you're trying to trade this thing on a shorter, just look at like your average daily ranges and use that as potential targets. If it's going to continue to move higher up to 56, 51, but not much in there. Grub on the rebound.
All right. No hot potato today. I thought with the two gas,
too much news.
We wouldn't have time. And also between the Brexit and the trade war, it's probably
news day.
News today was a news day. Some days are light on news. Some days are heavy. Today is the latter of the two.
We didn't even get to this story, and it's iHeartMedia.
Yeah, they're maybe getting taken off the board here.
Well, it sounds like there's a proposal on the table here. We don't have any numbers for you. At least we didn't last night when I looked at it. But Liberty Media, it's Liberty,
right?
And Liberty already owns a big stake, and they were talking about they're seeking to raise a stake or purchase. I can just read it right from the headline. There's Liberty Media affiliate is seeking raise stake in or a purchase, an outright purchase of iHeartMedia, which is IHRT. So it looks like IHRT is potentially in play by Liberty Media.
All right, we'll keep an eye on that story. Spencer, anything else you'd like to
yeah, I forgot to mention this yesterday, but I did mention it briefly on Wednesday. If you want to call us now and leave us a voicemail, you can do that. If you want to ask us your question, if you're in the chat.
Can't take just live callers?
No.
Not yet.
We don't have the capabilities for that?
No,
we're going to. That's what we're.
No live callers yet. But we know you can ask us questions in the chat. If you want to call us up and ask a question that way, you can do that. Just call this number I'm going to give. Tell us your name, what your question is, and we'll play it on the air and we'll talk about it. So the number is 734-494-0246. It's a Google Voice number. Again, 734-494-0246.
All the telemarketing algos out there just all of a sudden wrote down your number, so you can expect a lot of telemarketing calls.
That's okay. It's a Google Voice number. It's going to the cloud. We'll get the voicemails, and we'll play them on the air if we get any ones that we like. So give us a call there. Also, if you missed any part of our show, you can catch our full archives of every show from yesterday. I went back to the beginning. I think the earliest show we have up there is from 2014. So those are on SoundCloud, iTunes, Stitcher, Spotify. Also, we watch a show on youtube.com/Benzinga TV. I want to thank both our guests today, Paul Yook and Mark Charest. Thanks to all of you in our chat rooms. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Guys, any final thoughts here?
No, just keep your eye on the headlines.
Buy the dip.
Yeah,
it looks like buy the dip wins again. We're right at 8 o'clock. We ended up, selling off significantly and going red. And look, we're right back up there again. These dips only last minutes now. Seems like it.
Dips last minutes. All right, everyone, have a great rest of your Friday the 13th. Good luck out there. Have a good weekend. We'll be back with you on Monday.